Good morning. I'm here with Andrew Grins, Senior Client Portfolio Manager, Emerging Debt, Pictet Asset Management. Why is emerging debt interesting today?
Sure. Well, emerging market debt is actually a very large asset class. It's around $13 trillion in size, which means it's about the same size or larger than the market capitalization of the S&P 500 and roughly one third of global fixed income. But investors are significantly underweight the asset class. What we have seen over the past 20 years is more and more institutional investors take a strategic allocation to the asset class, particularly pension funds in the Benelux, for example. In a country such as the Netherlands, the average exposure of a pension fund is 5 to 7% to emerging debt, but in the UK, it's 1 or 2%. Emerging debt is a very attractive asset class because it offers a lot of diversification. There's
Mhm.
over 75 different countries to invest in of varying different qualities. Some are commodity exporters, some are commodity importers, and also there's different asset classes. There's
Yeah.
the emerging debt that's denominated in US dollars, where you don't have direct currency risk,
Mhm.
or local currency emerging market debt. Should I continue?
And what could change the exposure? So, what could, uh, why could investors come over to what could change that?
Well, I think what we are seeing right now is that one third of global fixed income has negative yields. The next third of global fixed income yields below 1%. If you're an investor and you're looking for yield, you need to really have some exposure to emerging market debt. So, just the US dollar denominated emerging market debt, you're getting a yield of around 5%. So, you're getting roughly more than 300 basis points over an equivalent US Treasury, and the average credit rating of that asset class is only one notch below investment grade. So, again, given that we have changing demographics, an aging population, people are living longer, and they really need assets that are going to be generating a yield.
And what are the main risks to the asset class?
I think some of the main risks for hard currency debt, and one that many investors think about, is what about defaults? I read in the newspaper about Argentina, Venezuela, now I'm reading about Lebanon. But I think it's important to remember that these examples are very, very few and have been very small. So, over the past 10 and 15 years, the average default rate for hard currency debt in emerging markets is only around 1.7%, which is significantly lower than European or US high yield investment. And again, you're investing in a sovereign government bond asset class. So if a government does default, countries like their debts don't disappear. They always have to come back to market and
Hmm.
restructure, which is different from corporate exposures. Sabena Airlines is one example.
And how should you, as a retail investor, play this team?
Well, you can access the asset class in a few different ways. I think, firstly, one is, do you want to have exposure to hard currency debt, which is denominated in dollars, so you don't have direct currency risk? Or do you want emerging debt that's denominated in the local currencies? So, government bonds denominated in Brazilian real, Russian ruble, etc., where the yields can be a bit higher and there's more potential for return from currencies, but the volatility is higher. So it depends on what is your risk tolerance level. But I think what an interesting question is I've sometimes met with investors and spoken about emerging debt. And then they've said to me, you know what, Andrew, it's just far too risky and our investment board will never allow it. And then I say, do you have exposure to emerging market equities? And they say, well, yes, of course. And interesting, emerging local currency debt has had a similar return to emerging equities over the past 10 and 20 years, with about half the volatility. So sometimes we should look at emerging debt not just as it's part of my fixed income bucket, but as an overall view of the portfolio, including sometimes equity type of exposure. But again, to get exposure, our funds are available directly to retail investors. They are registered in Belgium, Luxembourg, the Netherlands. And if it is not us that's being chosen as a manager, there's also passive solutions and ETFs and
Mm.
various ways that investors can get access.
And what will central banks in emerging markets do? Will they lower interest rates like in the Western world?
Yes, so it's interesting that 1 year ago we were in an environment where people were predicting the US Federal Reserve would hike interest rates 3 or 4 times, and then it was a complete U turn. What we saw last year was a lot of aggressive interest rate cuts by emerging market central banks. And in particular, when you look at Latin America, basically all of the key countries, their inflation levels are still below the target. So we would expect to see more interest rate cuts in emerging markets. So in Mexico, we think we could see 100 basis points in additional cuts this year. Now, for an investor, that's actually positive because if you're invested in Mexican peso government bonds and they cut interest rates, that actually helps to propel and boost local bond prices. So we do expect more interest rate cuts this year. It'll be mostly in Latin America and a bit in Asia. It will be less than last year. But yes, we would expect to see more interest rate cuts. The only exception is a bit of Eastern Europe. So in Poland, because of increases in the minimum wage, we're seeing some inflation pressures there. In Hungary, inflation came out a bit higher than expected. So Eastern Europe is a region where you're likely to see on hold or potentially an interest rate hike.
In the investment world, people are talking about ESG. How does the theme go about in emerging markets and emerging markets debt?
Sure, it's a very good question because when people think of ESG, they're often thinking of equities. Then they're talking about corporate bonds in ESG. The most challenging thing is how do you approach ESG when you're investing in a government bond, when, the Belgian government doesn't have any sanctions against various countries that have very poor scores for environmental issues or social issues. How do we apply the ESG to that? Well, we have fully implemented it. We've taken on that challenge. We have our own proprietary ESG scores, and every country that we invest in ESG analysis is part of that. And since last year, we have a fund which is specifically ESG. It uses an ESG benchmark, so it excludes specific countries, and then it reweights countries higher for those with better ratings and lower for those with worse ratings. But I think the most important thing that differentiates our approach is it's not just a tick box exercise. It's not, unless the ESG score is 5 or above, we're not going to invest. That's not the approach that we're taking. What we want to do is some engagement. So when we go to Argentina, for example, on a due diligence trip, we know that the IMF has told the government they have to cut budgets across the board, but the government promised they would not cut the budget for education. So what one of my colleagues did was go to visit schools in lower income areas as a double check to see, is that true? Did they not cut the budget on education? What is the quality of education? And then we're asking the government directly about those issues. So we're doing this in every country that we invest in, so governments know what issues are of concern to us, and it depends on the country. So in Mexico, it's more about violent crime, for example, and asking what the government is doing about it. Now that we're asking, the government needs to tell us at our next meeting if they've done anything. And if they haven't, it might mean that the next time they issue a bond, that we don't buy any. or we buy less, or they have to pay higher borrowing cost. So we want to have that sort of dialogue, but we also have to be very careful not to be seen as some new form of colonialism that here
Yeah.
we are, rich Europeans flying
Yeah.
in and telling these, less developed countries what to do.
Okay, very interesting. Thanks for your time.
My pleasure. Thank you.